Aloha, this is Jeannie Kong-Evarts at Maui Real Estate Advisors, and I'm with my colleague Jaimie Brown. Hey, Jaimie. And we are back with Kara Beltran of Kind Lending. She has been a lender here for over 30 years, just making everyone's dreams come true. So today's topic is Condotels. Kara?
Take it away.
Yes.
All right. So on the topic of condos, it's really important for a home buyer to understand the difference when they're purchasing a normal residential condo, right? Like a regular neighborhood versus entering into the vacation rental business. All right. And so basically they're interested in purchasing a condominium that sole intent is meant to be rented out, and not just rented out on a long-term basis, but rented out on a short-term basis, right? So with vacation rentals, they're transient, and depending on the rules of the AOAO and the rules of the jurisdiction, right, that the condominium is within, they can either check in and out on, less than 6 days, or they might have a minimum 6-day check-in, stay. But from a lender's perspective, that no longer qualifies as an agency project, meaning that Fannie Mae and Freddie Mac, as the biggest investors in home loans throughout America, is not interested in doing business in short-term, transient in nature type of condominiums. And so therefore, the distinction, right, to identify those condos is condominium, hotel, and they've coined it and given it a cute name of Condotel. Okay. So essentially, if the homeowners association is committed to a contract with, say, Diamond Resorts or a vacation rental company, then there's just no workaround on that. Okay, because the project overall is committed to a short-term rental relationship. Therefore, there's no room for interpretation that, oh no, it's not a condotel, and here's why. Okay, so as lenders, we really look out for that. Another thing is that when we go to search the property on Maui real property tax, or whatever the county that the condominium is in, if it shows that the class for the taxation is short-term rental or vacation rental, something of that nature, then again, that's something that the underwriter is going to come across and check. And the underwriter, who's in the driver's seat to make the decision of approving the loan or not approving the loan, whose basically neck is on the line, right? If Fannie Mae pushes back and says, hey, you didn't do your homework. Didn't you see that this was a short-term vacation rental situation? And so therefore you should not have warranted that this loan meets Fannie Mae and Freddie Mac warrantable guidelines. This is false. And so now you have a pushback, right? They say, you got to buy this loan back. Now, we're mortgage loan originators. We're in the business of originating and closing loans. We're not in the business of repossessing property and listing them for resale. Okay. We're not in that business. Our business is all about originating and closing loans successfully. So when we hear the word repurchase or a pushback from an investor, it's not good for us. It's not good for us as mortgage loan originators either, because we're supposed to work in conjunction with our underwriters and the guidelines to make sure that the collateral that we're presenting to Fannie Mae really does meet their guidelines. So we want to make sure that we're cautious about that. So that's a distinguishing character. Okay. The interesting thing is that if you go into the Fannie Mae guidelines, it'll say, if your condominium meets any one of these conditions, then it's a condo hotel, and therefore it's not warrantable. So it's not a matter of, oh, well, it doesn't meet all of the conditions on that list. No. If it meets one of those conditions on that long list of ineligible requirements, then we have to do the moonwalk and we have to walk away and say, no, we cannot make this work. Okay. So I think it's super cool because, we all live, work, and play where we sell. So we are all very familiar with a condominium project that really is a condo hotel, and there's no other interpretation left on it, right? We know what condos those are. So we come out of the gates and we educate the consumer and we say, hey, Mr. Smith, I'm really happy that you're interested in this condominium, but I'm going to explain to you what a condo hotel is. and how that impacts your financing. Okay, so I'm going to jump right into the financing piece of it now that we've kind of spent time identifying what a condo hotel is. Okay, so it's essentially a condominium that's run like a hotel. You can check in, check out in under 30 days, right? 6 days in most cases. They have a hotel cleaning service. In some cases, they have room service. So those are the things that you really want to look out for. And some of the things that the underwriters are trained to look out for is just in the name. So if it says something resort, they almost always 99%, it's a condo hotel, right? So why is that important to you as a consumer when you call Jeannie and Jaimie up and you say, hey, I'm interested in purchasing this condominium and now I explain to you it's a condo hotel? It's because your down payment, number one, is really important. There's no workaround. In most cases, the down payment is 25% because the lender, in most cases, are local banks here in Hawaii who are financing the condominium hotel. They're not able to sell it on the secondary market. And most of the loans, if you're in the loan business, you understand that when you go to sell your loans on the secondary market, those are the most profitable loans. All right. And so when you as a bank are opening up a special program, a portfolio program, so that you can accommodate the needs of the local masses who need condo hotels, guess what? You now have a special bucket. And in your special bucket, you're going to increase your interest rate. Why? Because I just said you're not going to make as much money selling it on the secondary market. So now your interest rate's going to be higher. So, if you're shopping around for interest rates and you hear somebody tell you, oh, well, the interest rate's going to be this instead of that, you're going, well, why is that interest rate 0.5% higher than the interest rate that I was just quoted by ABC Mortgage? Well, it's because when you talk to ABC Mortgage, or when you and I were talking yesterday, you were shopping for a residential condominium. But today you're interested not in a residential condominium, you're interested in a condotel. And so now we're talking apples to oranges. So today we're talking about condominium or condotel interest rates, and those interest rates run anywhere from 3/8 to 0.5% higher on the interest rate. We're not talking points, we're talking on the interest rate. So it doesn't make a bigger difference to you as a consumer. It's like, oh, I got to come up with 25% down payment. Oh, my interest rate's going to be 0.5% higher. Okay, maybe I'm not interested in it. But you want to know what the benefit is to you? You're a business person. You get to rent this vacation. You get to rent your condominium out. If you're living in the mainland and you want to buy this as an investment for yourself, and you're only going to make it out to Maui, say 2 weeks out of the year, or you might make it out to Maui every 6 months for 2 weeks, guess what? You get to rent it out and you get to monetize your purchase so that it pays for itself while, you're over there in the mainland doing whatever you got to do. And you know what? There's a lot of local investors here that might live on Oahu. They want to buy a condo hotel on the different outskirt islands, right? From Oahu, you might have someone who lives in Maui, right? Like myself, who invested in a condo hotel in Ko'olina because my husband and I love the Ko'olina. We like to go back and forth, right? So those are the advantages, all right? So for every disadvantage, like a higher interest rate or more down payment, there's a major advantage because you get to monetize your purchase like you wouldn't be able to on a long-term residential condo situation, okay? So I think that kind of sort of hits it in a nutshell, but I'm going to defer to you lovely ladies if you have any specific questions that I might be able to address for you.
I have just one question. And I do have local clients that, they started with their condo, then got the house, and now they're looking at the investment property and a condotel. So is the history of rental income for the condo, could that be used to help qualify?
Boy, that is a really winning question. Thank you for asking that question, Jaimie. So when we go to qualify the loan, depending on the bank that the loan is geared for, they have their own intricate requirements. Okay, so one bank might say, I don't care what it rents for currently, notwithstanding the fact that it's a vacation rental, we're going to qualify this loan ultra conservatively, and we want the appraiser to find long-term rentals inside of the project and give us long-term rental market analyses, and that's what we're going to use to qualify the loan. Okay, so that might be one bank. Another bank might say, oh yeah, we're totally fine if the seller on the property gives us their rental agency, and the rental agency will confirm for them what the condo may have rented for in the past. So that condominium rental agency, who's a professional, right, property manager, they'll take their word for it on their letterhead what the gross sales were that they collected on the subject property in the 2 years preceding this pending sale. So that's another way that we can work with them in order to use rental income from the subject property to help the new borrower qualify. And that is, of course, if the new borrower even needs it. Because when we're dealing with condo hotel purchasers, in a lot of instances, we're dealing with people that are heavy hitters in terms of their finance profile. They're so financially well off that they don't really need rental income from the subject property. So naturally, if we don't need it, we're not going to bother with it, right? We're going to keep it very simple, very streamlined, and we're going to save them money, because anytime we ask the appraiser to do any kind of work, it's going to cost several $100, right? So, but that was a really good question. Thank you. I appreciate that. Any other question?
I do. So just to clarify, not every mortgage broker can lend on a condotel.
You're
correct?
absolutely correct. No,
Okay, because
not everyone can. So there's a difference between a non-warrantable condo and a full-fledged outright condotel. Okay, so there may be lenders that can do warrantable condominiums and they can do non-warrantable condominiums, but unless the lender specifically states they can do condo hotel, they cannot do condo hotel. So I mentioned the local banks, because the local banks, they got it. It's all about the local banks, because they live, eat, work, play here. So they're very familiar with the product. And so therefore they've created that loan for that specific product. So any of the local banks can do it, and any one of us that are lenders that have entered into a broker relationship with the banks can do it for sure. Okay.
I think that's really important to note, because as a buyer's agent and as a seller's agent, when you get a buyer and they come with a pre-qualification or pre-approval letter, and it's, I see red flags when the down payment is way too low, or, I ask the question, this is a condotel. Are you sure your, lender can lend on this? And, it's important to confirm that, because I've gone, Jaimie and I are experienced enough that from the beginning we can kind of qualify that and see if they actually have done that. But you don't want to get into a long escrow and have the buyer's lender saying, yeah, I can do it. And then down the line, it's like, oh, cannot, lend on that. So it's really important, you as a consumer, to make sure you've got experienced people, working on your behalf.
I really appreciate you sharing that, because that's absolutely true. And then we get back to the pre-approval letter, because the pre-approval letter is not worth the paper it's written on if the individual or mortgage professional issuing that pre-approval letter does not have the experience, backing up that pre-approval letter. And that's the reason why we've talked about how important it is for you as a consumer to use a power team and experienced team like Jeannie Kong, like Jaimie Brown, like Beltran, because we've all been selling real estate. Combined, our experience is probably over 100 years. Okay, so I do not know if I should be saying that out loud. I felt it right then. But it's a major advantage for you as a consumer, because these gals, when they see the pre-approval letter, that's exactly what they're going for. They want to make sure that the pre-approval letter holds true. Okay, so be sure to give Jeannie and Jaimie a phone call, because they won't misguide you for sure. They're very experienced in selling condo hotels. They see things coming from miles away. This is definitely your power team. So go condo hotel, monetize your investment, call these lovely ladies, and if you have further questions, we're here for you.
Absolutely. Well, thank you, Kara, and thank you, Jaimie.
Thank you, Kara.
And
thank you,
we'll
Jeannie.
Put the
Thank you, ladies.
info.
All right.
We'll put the contact info below, and watch our other videos, because it's just gold. So thank you, guys.